Coming to a mine, oil field, or distressed manufacturer possibly near you, the People's Republic of China, whose banks are in good financial shape. Chairman Mao's successors, checkbooks in hand, are eyeing opportunities in today's credit and commodities crunch. Even for sizable mining concerns, it's China to the rescue, like state-owned steelmaker Hunan Valein's 17.4% stake in Australia's Fortescue, a $900 million investment. Beijing is pushing deals like this to be well positioned come the global recovery.
It needs to have some form of stability over the continued supply of iron ore into its steel industry, and that iron ore needs to be high quality, it needs to be continually supplied, it needs to be sustainable, and it also needs to be at a good price.
Other big Chinese strategic activities this year include a $25 billion loan to Russia, which is suffering from falling crude prices. In return, Moscow promises to supply 290,000 barrels of oil daily for the next 25 years, plus build a delivery pipeline. The carnival continues across the oceans. A $10 billion loan to Brazil. Oil in return. $4 billion for Venezuela. Yes, in exchange for oil. From oil for loans accords to bargain hunting for corporations, the Chinese government is gradually loosening its tight controls on overseas ventures. Expect the country's sea cargo companies to acquire interests in struggling ports and shipping lines. And with the US auto industry in a state, Chinese acquisitions are a near certainty. There are, however, some nagging doubts. China, with its poor political reputation abroad, is often viewed with suspicion, especially by governments that answer to electorates. Take Australia, where many fear the country's very sovereignty is under threat. China's $1.8 billion offer to acquire debt-laden Oz Minerals was blocked on national security grounds. And Chinalco's $19.5 billion stake in cash-hungry Rio Tinto is a political hot potato. Yet despite this, some with a long history of dealing with China say its government should not be accused of ramping up control of global resources.
I don't think it's doing that. I don't think it can do that. There are severe limits, but it is seeking to acquire resources, which is what you would expect. I don't think that any of the things that is happening are that surprising. What is surprising is the scale and the speed of it.
China's Go Global strategy launched modestly 11 years ago. By 2003, annual overseas investment, excluding the financial industry, was just $3 billion. Then, year by year, it leapt to $50 billion in 2008, half of the FDI into China. This year, in February alone, China invested more abroad than all of last year. The question now is whether Beijing will allow its currency to strengthen, and so make the expected increase in acquisitions even more attractive.
China is not taking advantage of fire sale because actually the renminbi is too low in value. China would actually buy more cheaper if the renminbi would be appreciating. So at least China subdues the value of the renminbi. They could actually go far more shopping if the renminbi would reflect its real value.
Vincent Mo would likely agree. He runs China's leading internet property portal and organises trips to the US to buy distressed property in the $300,000 to $800,000 price range. Over 11 days, the group's home hunt in 4 major cities, plus Las Vegas. The Chinese have better timing than their Asian neighbours in the 1980s.
One thing which is different, the Japanese, when they bought the property in the States, it's at the highest price of the market, of the properties at that time. So now, the Chinese individuals, they're buying the properties, I would say, at the bottom price.
China is being careful not to copy Japan's mistakes. It's wary of the financial sector, other than holding bonds and currency. And there's little appetite so far for foreign commercial property. But China does have high-tech ambitions. The trouble is, US cutting-edge technology remains blocked to China due to military security concerns. Beijing argues, however, that its intentions are purely peaceful and that such expensive purchases would help mitigate the huge trade imbalance. In an interconnected world, one with a wounded economy, countries are having to change focus, moving from how to limit an ambitious China, if that were ever possible, to how to work with her.